Ever wondered how biggest players pull off risk-free profits worth millions with investments you thought were safe and simple? Welcome to ProBest Analytics, where we turn the mysteries of modern finance into actionable insights you can actually use. Today, we're tearing the lid off one of the most popular but misunderstood investment vehicles out there: exchange-traded funds, or ETFs. Sure, you might have heard that ETFs trade like stocks and offer broad diversification, like mutual funds. Ever wish you could buy one share and instantly own a slice of an entire market? That's the power of ETFs. Let's first understand what ETF is. An ETF is essentially a hybrid vehicle. Imagine taking the best features of stocks and mutual funds and combining them. At its core, an ETF is essentially a basket of securities that trades on stock exchanges just like individual stocks, while providing instant diversification like mutual funds. What makes ETFs truly distinctive from mutual funds is that they are traded in the secondary market, allowing investors to buy and sell shares throughout trading hours at real-time market prices. Now that we understand what sets ETFs apart, it's time to see how these concepts play out in real-world performance. With the groundwork laid, let's turn our attention to the numbers that truly tell the story. Now, based on the financial data presented in this table, we can clearly observe that ETF returns are strategically positioned between mutual funds and bonds, creating a compelling middle ground investment option. The numbers tell a clear story. Bonds deliver the most conservative returns, averaging 8.91%, ranging from 4.5% to 15.45%, while mutual funds achieve the highest returns at 24.14% average, spanning 17.6% to 30.50%. ETFs occupy the sweet spot in between, with an average return of 20.15%, ranging from 17.0% to 23.92%. This positioning reflects ETFs' passive management approach and lower expense ratios compared to actively managed mutual funds, while still offering higher return potential than conservative bond investments. ETFs consistently demonstrate this balanced risk-return profile that makes them an attractive option for investors seeking moderate growth without the higher fees of active management or the limited upside of bond investments. Now I am going to introduce authorized participants. These are the unsung heroes and profit makers operating behind the scenes of every ETF transaction. With an example of a discounted scenario, a bargain on ETF shares. What if Citadel Securities sees the same ETF now trading at $418.90 when the basket of stocks is still worth $420? Citadel Securities, one of the largest market makers in U.S. equities and ETFs, acts quickly, buys up ETF shares at $418.90, often using advanced high-frequency algorithms, presents these shares to the ETF sponsor, who gives Citadel the underlying stocks worth $420 in exchange, sells the individual stocks on the open market for $420. Profit per share, $1.10 before costs. Not bad for a few seconds engineering. And that's a wrap on how authorized participants operate behind the scenes to keep ETF markets efficient while making serious profits along the way. These financial giants are literally the invisible hands that make your ETF investments work smoothly every single day. If this deep dive into the world of ETFs and authorized participants helped you understand how the market really works, smash that like button and let me know in the comments what other financial topics you want me to break down for you. Don't forget to subscribe and hit that notification bell so you never miss our latest financial education content. Trust me, You don't want to miss what's coming next.